I'm the only guy. Here's my
Been a lot of that. There's
Yeah.
been a lot of cash buyers. I mean, that's been 40, 50, if not 60% of the market over the last couple of years. I mean, there's just so much wealth that's been created. Inventory continued to reduce. We all thought, that things would correct a little bit quicker with interest rates going up. But the problem is so many people got locked into, those low interest loans. They're healthy borrowers. They're at, they're at 2-3%. There's no reason for them to sell that house with that kind of a mortgage, but also wherever they're wanting to go, there's nothing for sale where they want to go.
No.
And, that's the biggest issue right now, because every seller is a buyer, for a renter. And, when there's no inventory out there for rent or to buy, there's nowhere for sellers to go. So they're like, you know what, we'll just stay here. But we're starting to get to the point now where some of that's loosening up, because there are, interest-only loans. We're seeing the Fed start to talk about rate cuts, maybe towards the end of the year. So there is some hope that mortgage rates, will continue to come down a little bit, even though mortgage rates are based on the Treasury, the 10-year note specifically, which is coming down because of Fed funds policy. Fed's lower rates, bonds will reprice and rates will come down a little bit, which affects mortgage rates. So we're starting to see that correct a little bit.
Yeah.
We're seeing builders that have a lot of inventory offering, buy downs and things like that, buying down the interest rate, doing sales and things like that. So we're starting to see it loosen up again. And but we still have, constricted inventory in a lot of markets. It's still a problem in a lot of areas.
It's the laws of supply and demand. I mean, you can't break the laws of supply and demand. Whenever there's a supply and demand imbalance, it has to work itself out before things will change. Now, other factors can affect that, but at the end of the day, it's just supply and demand. You've got very low supply, and you've got, even though it's probably not super high demand now, but you still have demand for that low supply. So, that's just how it's going to go.
Yeah, in markets where there's a lot of demand, houses are still selling in days. They're still getting multiple offers. It's not as crazy as it was, but you're still seeing it. And then there's markets where, inventory's stacking up, price reductions, houses aren't moving, days on market's going up. So you're seeing that happen in some markets, but it's really interesting. It takes time. The housing market is a very slow moving train, although we did see it fall off a cliff in 08-09 because financing dried up. Values were correcting so fast, but the bottom line was people couldn't get a loan.
No.
It's all driven by liquidity, right? So it's debt, and the cost of the debt is what drives values in real estate, commercial or residential, on top of demand, right? So demand, location, all that can make a big difference both ways, a premium or a discount. But at the end of the day, if you can't finance a property, and if that financing is expensive, well, that affects demand, more than anything else, really. Even if you've got the best location in the world, you can't get the financing, and the debt doesn't make any sense, and debt doesn't matter.
Yeah, you get cash buyers are the only ones buying stuff at that point, and they're buying them for a song because they're the only. I'm the only guy. Here's my
Been a lot of that. There's been a lot of cash buyers. I mean, that's been 40, 50, if not 60% of the market over the last couple of years. I mean, there's just so much wealth that's been created over the last couple of years. It's that huge disparity between people that don't have any money and people that have a lot of money. It's a really interesting time.